Wall Street indices finished mostly in positive territory on Tuesday, despite the lack of progress on a new stimulus package and ongoing concerns over the economic recovery amid the pandemic. On the data front, U.S. home builders began construction on homes at a seasonally adjusted annual rate of 1.496 million in July, up 22.6% from the previous month and 23.4% from a year ago, while permitting activity occurred at a seasonally adjusted annual rate of 1.495 million, up 18.8% from June and 9.4% from July 2019. As a result, the Dow Jones Industrial Average slipped 0.2% to close at 27,778.07. The S&P 500 gained 0.2%, finishing at a record 3,389.78, and the Nasdaq Composite Index added 81.84 points to reach a record close as well. Asian stocks were mixed on Wednesday after the S&P 500 index hit a new record. In Japan, the Nikkei 225 advanced 0.26% after data showing Japan's export in July declining 19.2% compared to a year ago versus the median forecast of a 21% decline. Hong Kong's Hang Seng dipped 0.74%. South Korea's Kospi advanced 0.52% to close at 2,360.54. Shares in Australia rose on the day as the S&P ASX 200 gained 0.72% to 6,167.60. A day earlier, China's Ministry of Commerce said it was launching an anti-dumping investigation into some wines imported from Australia. Overall, the MSCI Asia ex-Japan index shed about 0.2%. European stocks pushed higher on Wednesday despite signs of more U.S.-China tensions. U.S. President Donald Trump told reporters in a recent interview that he postponed talks with China because he doesn't want to deal with them right now. The statement raises questions about whether trade talks can get back on track as relations between the two countries continues to splinter. The Stoxx Europe 600 index rose 0.3%, the German DAX rose 0.3%, and the French CAC 40 rose 0.2%. The FTSE 100 was also up 0.3% after data showed that the UK inflation jumped to an annual 1% in July versus expectations of a much lower number of 0.6%. As for the key event of the day, the FOMC meeting minutes showed that the central bank officials acknowledged the pickup in some key indicators but reiterated fears of a slowed economic recovery in July, with uncertainty and virus risks continuing to plague the economic outlook. Fed officials noted that most major gauges of economic well-being remained well off their pre-pandemic levels despite several economic indicators improving throughout the month. The staff cut their economic growth forecast for the remainder of 2020 and stressed the need for more fiscal aid in the wake of the pandemic. Major Wall Street indices wiped their gains and slipped into single-day losses following the minutes release. The Dow Jones Industrial Average shed 0.3%, the S&P 500 fell 0.4%, and the Nasdaq Composite Index slumped 0.6% to close at 11,146.46, after also reaching a new intraday record of 11,257.42. The Fed minutes echoed earlier warnings by Fed Chair Jerome Powell about the significant risks to the economy. Still, the document put stocks under a decent selling pressure while lifting dollar across the board. As a result, the Euro-US dollar retreated from two-year highs but managed to stay above the 1.18 handle and suffered limited losses. The pair derived support from the 1.1830 area while today's intraday low arrives. The pound sterling US dollar slipped marginally below 1.31 amid a broad-based recovery in US dollar demand, while the US dollar Japanese yen pair climbed above the key 20 DMA, trying to regain the 106.00 handle earlier on Thursday. Elsewhere, crude oil prices rose marginally higher on Wednesday as concern lingered over the soft U.S. fuel demand and risks for the market recovery. Meanwhile, the Energy Information Administration data showed that the U.S. crude oil stockpiles fell 1.6 million barrels last week. During the OPEC Plus meeting, the Saudi energy minister said that the global oil demand should recover to pre-pandemic levels as soon as the fourth quarter, while urging compliance with a global deal to cut output. Early on Thursday, Brent crude was changing hands around the $45 handle, nearly unchanged on the day. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.